Welcome back to Morning Markets on Monday, the 22nd of May. A positive week for stock markets and sterling terms across the globe. With growing optimism, we may see progression, even a resolution on the US debt ceiling impasse in the States over the weekend. Please do stay tuned to find out more. The US debt ceiling is a rule which essentially limits the amount of money in which the government can borrow in the US. The current level is $31.4 trillion. Janet Yellen, the Treasury Secretary, has warned that unless a resolution is formed by the 1st of June, essentially the administration is running out of funds to pay its debt. So this is a topic which is in very high focus at this point in time and is highly political. If we look back historically, this is a situation which has occurred a number of times, but has always been met with negotiation around budgetary agreements and therefore a resolution. And we expect the same to occur at this point. However, it's going to run to the 11th hour. It's going to be highly topical and there may be some volatility driven with this. However, we were hoping we would see an agreement on the weekend. Unfortunately, that didn't occur, but progressive talks do continue within the background. Last week's news flow was heavy regarding central bankers who are reaching for the microphone to give their view in terms of the future pathway of US monetary policy. Within that, we heard from a number of the hawks within the Federal Reserve camp who were discussing the fact that potentially interest rates may need to go even higher than their current levels of 5% in order to bring inflation down to the 2% target. On Friday, this was met with a degree of balance from the Federal Reserve Chairman Jerome Powell, who essentially acknowledged that they are data dependent, so will be very much respondent upon the underlying drivers of inflation and the signals which they're getting from that. But they're also very much acknowledging the fact that although the emergency liquidity program, which was introduced in March to support liquidity within the regional banking sector, has been effective, underlying financial conditions do continue to tighten. This essentially constrains the amount in which regional banks and a number of banks across the states are prepared to lend and the price in which consumers can borrow. This therefore curtails, stems and moderates economic growth through lower spending and lower borrowing and lower investing. This has a wash-through effect, therefore, for the Federal Reserve of moderating inflationary pressures. Therefore, Jerome Powell highlighted that the Federal Reserve may not need to raise interest rates to the level which would have otherwise been required to bring inflation towards target. So a positive week for equities driven off expectation of a moderation in terms of the debt ceiling. However, those negotiations continue to rumble on. This week we'll gain greater insight in terms of the thoughts of the Federal Reserve members as we receive the minutes from the May meeting. Across the UK, we'll receive inflation data, which will be very important. We'll bring you up to date on, along with a number of sentiment indicators from Europe, from Japan and across the US as well, which will be an important driver in terms of how businesses on the ground are thinking as we look forward. That's all from Morning Markets this morning. Please do tune in to find out the developments from the team around each of these topics. Thank you for watching.